Morning, Wall Street winners. It is Monday, December 2nd. We are into the last month of the year. And if we take a look at where things sit in the Bloomberg, we can see that in the futures, two of the three indices are up. The third, the Dow, is down, but only slightly. And I expect that it's going to come back and probably be in the green as we get into the open in 45 minutes. The other two indices aren't up huge, they're up slightly, but it's positive that they're up. If we take a look at the news going on, there's talks of tightening curbs or potential tariffs to China and other countries on access to AI chips and AI memory. President Biden pardoned his son Hunter Biden. There's some political ramblings going on over in France and the French government. The ceasefire continues in the Middle East between Israel and Lebanon. So that's kind of where we are right now overall. If we take a look, before we go over to the Yahoo Finance app, I wanted to show you an email that I subscribe to. It's free. It's the Unusual Whales email, and I get this on a daily basis. And this does a great job at going over some of the stocks that they're watching for options plays in some cases, and how to play those stocks from an options perspective. Today's coverage is on Lulu, and that's one of the reasons I wanted to point out this email. They've also got a sale going on right now. So if you wanted to take a look at their offerings, have a look at their Black Friday sale. I am not promoting this. This isn't sponsored in any way by Unusual Whales. It's just one of the many tools that's out there that I leverage. And I use the unpaid subscription component for that at this time. So it goes through a summary here of Lulu and what it expects to happen at earnings and maybe how to play that from an options perspective. But then on Mondays, usually what it does is, or Sundays, it provides a great summary of the week to come. So here are some of the earnings that we're set to receive this week. So from the stocks we follow, there's a number of them in this list. The first one out on December 3rd, tomorrow, is Salesforce Aftermarket, CRM. So expecting this stock to do well in the earnings announcement. Hopefully their AI story has come together here. They're able to focus on that and they're able to show revenue and EPS growth around that. This suggests an expected move, as you can see, of $20. That's a pretty significant move, but that's what they're predicting. Now, that could be up or down depending on the results. Then we've got Okta. This is a company that has not performed very well this year. It's announcing, we don't follow that, but I just wanted to point that out. Then we get into December 4th. We've got Dollar Tree. We've got we should have Dollar General in there, I thought, as well. We've got Chewy, which we don't follow, but that'll be an interesting one to keep a look at. Foot Locker for shoe sales, which could affect Nike. Then December 5th, we've got Hewlett Packard. Again, not something we follow, but coming out, that'll help us with AI server sales and what's going on there. You've got Dollar General that day. And then we've got Lulu, which comes out on the 5th, which we do follow, and an expected move there of $25. DocuSign, which we don't follow and hasn't done really super well as a stock. Canadian Solar, another one that might provide some indication there of the green market or the ESG market and what's happening in the solar space. And then if we scroll down past their offer, we've got other information in terms of economic data that's coming out. So job openings on Tuesday, leading to ADP report or the employment report on Wednesday, a bunch of Fed speak, blah, 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 but not the actual Fed, just the regional Feds. You've got your trade deficit on Thursday, and then on Friday, it's your unemployment rate. So this is the U.S. employment report day on Friday, and this is where I think you're going to see the biggest move in the market around that number, especially in the financials as we get to Friday, because this is going to dictate the move and the announcement on December 18th from the Fed. So I just wanted to point that out as something you might want to take a look at. If we take a look over here at the sorry, at the Yahoo Finance app, you can see we've got the same thing. So on Tuesday, we got Bank of Nova Scotia reporting and CRM, Dollar Tree, yeah, Dollarama and Dollar Tree. I thought they were on Wednesday together. And then Thursday, we've got TD Bank. Canadian Imperial Bank of Commerce, CIBC, got Dollar General and Lulu, and then Friday, MongoDB. So that's what we're looking at from an earnings perspective. If we go back to our watch list and look at the top here, you can see that crude is up. So it's up a dollar at 69. So that's good. Interesting, even with the ceasefire, that crude is moving upwards. We have the VIX down below 14, but on the rise. So still in the 13s. The NASDAQ futures are in the positive. And if we scroll down and take a look at where we are from a pre-market stock perspective, Costco's at, I believe, an all-time high here at 971. I'm going to be staying away from Costco at this point. I think it's going to pull back. I think the whole market after the Santa Claus rally, which should go until the middle-ish of the month of December, I think the whole market is set to pull back a little into the Christmas holiday, and then it could jet forward come the new year and the start of 2025. But we'll have to wait and see how that plays out. So Lulu's up a little bit. There's expectations that Lulu's going to run up into earnings, and then based on earnings, it will determine what happens at that point. Dollar General, I believe, at this point with earnings this week, I think it's a bit of a steal at $77. It's clearly near its all-time low. Consumers are concerned about costs. They've been going to Walmart. Walmart's been going up. They've been doing well. I think Dollar General is going to have good numbers, but there is a red flag and concern or risk here around the potentially imposed tariffs or the threat of tariffs with incoming President-elect Trump. That could have a dramatic impact on the cost of goods for Dollar General and then the cost they have to pass on to the consumer. Walmart continues to move forward, but I think it's got to be nearing its highs, so I'm staying clear of that. I do like ATD, Couche-Tard. I think it's still reasonably priced at 81.91. If we look at the year to date, it is getting close to its highs, so you may want to hold off on that and wait for it pull back into the 70s. But we did recommend it when it was down in the mid to high 70s, so you would have had a nice little percentage gain there if you had got in on that. Um, I think Home Depot's starting to or has turned the corner, but I think there could be a bit of a pullback in Home Depot. Again, there's a lot of risk here in the retail side with those threats of tariffs coming. So I'm just a little nervous around those tariff threats, and I'm a little more cautious in that regard. We've got Nike making a bit of a comeback. New CEO now is and has been in since mid-October. So we'll have to wait and see what their earnings look like when they come out and see if that individual coming out on the 19th of December, what impact they've had in a very short period of time. And again, only not even a full quarter in his new position there as a returning executive. Then we go down to transport. Going to ignore that right now, not of interest. Oil, for the most part, is up this morning, although it is a bit of a mixed bag. I think with crude up, all oil will be up. So if I were to look at a stock that I like in oil right now, it would be Valero. I'd be buying into that in the pre-market when it's down 44 cents and seeing if we could get that up to 141 today and take a nice little daily profit gain on that one. Um, Moving down into tech, you can see that Micron is below 100. Micron is yet to report. So this is one of the companies that reports late in the cycle. It's reporting on the 18th. So I believe that Micron is going to be a $120 stock, maybe more, maybe 130 on earnings. And I think that if you can grab it below 100, you're going to do very well. It was below 100 before the last earnings, and it spiked up into the 110, 114 range. I think it's going to do something very similar on this earnings report because earnings should be very strong for that company. Palantir continues to move forward after its inclusion in the S&P 500. This is a stock that's easily doubled this year. It's done better than doubling, in fact. It's been a great investment. CRM coming out this week. So in the 330s, it's been higher recently. If we look at the last month, it's been up into the 340s, almost hitting 350. So we'll see what happens with earnings this week. If they do have good earnings, I could see it getting into the 350, 360 range. But good earnings aren't guaranteed. But I think it's a stock that has not done well year to date, and those that have not done well and had a couple of bad quarters seem to be turning the corner and announcing better results. So I think we're going to see that from CRM. And what one of the things that's been plaguing CRM is just the maybe not lack of AI story, because I'm not going to say they're not doing anything with AI, but the way in which it's been communicated. So hopefully the messaging around AI is stronger and they get back on that bandwagon and they promote that, and that potentially pushes that stock forward on that news. Palo Alto doing really well. So it fell significantly earlier this year, but has made its way back up into the we're going to call it 390s at this point, based on where it's looking like it's going to open today. NAT is also, Cloudflare is jumping $4 in the pre-market. So that's a big move for NAT. That should be 110, $115 stock. So not surprised to see it catching up, but it's been a bit of a laggard this year for sure. Microsoft is in the low 420s. I'd probably wait for it to move back into the 410 to 19 range before picking that up, knowing that it should get to 440, 450 by the January timeframe. ARM has been a super volatile stock to be in this year. With Nvidia off today, I'm not sure I'd get into ARM today, but I would continue to watch it for sure, because there is potential for some big moves in that. AMD almost back at 140, so that's regaining to it's moving upwards anyway, getting back to its highs, but still off it by $20 or more. And then Workday got slammed last week on earnings. Looks like it's pulling back a little bit. Well, pulled back on Friday in the shortened trading day. It's up slightly today. I think for a long-term hold, Workday is pretty solid at 250. And then you got Lam Research. Lam Research had a great day on Friday. It looks like it's up a little bit today. So this should climb back up into the 76 to 80 range by the end of this year, maybe into the mid 80s by the end of the year. So within the month of December. And as we scroll down further, Tesla has been a bit of a rocket ship like SpaceX, but it's continuing to climb today. I had a horrific Tesla experience earlier this month. I'm staying away from Tesla. The customer service there, both pre-sales and post-sales, was way less than expectations and desired. So not only did I not buy the car, but I'm not buying the stock either. Meta is, in my opinion, underbought. I'm been buying more Meta. I think it's underpriced and undervalued, and I think this stock is a $650 stock by the end of January. So I've been loading up on Meta. I've also been loading up on Google down in the 160 range and low 170s, and on TSM down in the 180s. It's looking like it's going to make a $4 move to the upside, which should get it closer to the 190 range. But this should easily be a $210 stock, if not higher. And they report in mid to late January. So we'll see what those earnings come out with, but I expect them to be extremely positive. The other one that's yet to report is Adobe. We've got 9 days to Adobe earnings. Adobe has not had a great year, but it's slowly starting to come back. I mean, it was up in the 600, 630 range earlier in the year. It's dropped down, never to get back up there again. But I think that with good earnings and again, a better AI story similar to CRM, I think it could get there. And then finally into financials, you've got SoFi. SoFi has been the poster child for stock success this year in the financial sector. This stock now above 16, in the 1640 range, looking like it's going to get to 1650. We were recommending this a few months ago, back in the low $6, high $5 range. So you would have tripled your money if you had a bought and held SoFi. Still a fabulous stock with lots of forward momentum there. And then your big boys. I think the big boys right now are too pricey. There's no value here. I'm staying clear of financials right now. Um, Waiting until earnings in January, I do expect a fairly significant pullback in these stocks before earnings, and then maybe a run up into or after earnings. But at anything above 600, I think Goldman's overpriced. Morgan Stanley at 131. I think it should come down to 110, maybe 104, and JP Morgan up at 250. I think that stock's going to reset down into the 210 to 220 range. So definitely avoiding those. I think we're going to have some good news coming out of the Canadian banks this week that report. So CIBC, Bank of Montreal, those banks that are reporting this week, I think the news will be positive. So that could be another one to get into and keep an eye on this week. So that's where we are. Good luck in your trades. And if you're liking these videos, please hit the like and subscribe button, and we'll talk to you again tomorrow.